which we started to celebrate our 25th anniversary. But as we say, by popular demand, we have continued the podcast series. Today, we have somebody very special. Uh, if any of you know Carl Jung's theory of archetypes, then sitting in front of you is the original rebel archetype, Sandeep Tandon. Hi, Sandeep, welcome.
Kiran, nicely you have described me.
So Sandeep, I mean, it's fascinating what he does. He took this mutual fund, quant mutual fund, and in 5 years it has gone from, I think, 27 crores to about 1 lakh crores, which is an incredible feat. But more important than that, he has achieved this through a very, very unique theory of his, where macro influences guide micro influences. In fact, he has invented something called earth analytics, right? Where, I mean, when I'm talking with him, this amazing thing about that the magnetic field affects the earth, then affects the markets, and then affects the human beings. So, Sandeep, first tell us about this powerful thesis of how macros and why people have never tracked macros and how you did it.
See what happens in the when the country was in the infancy stage. Let's say we are emerging market. Okay, so we are people think we are emerging market. Let's focus on stock specific thing. Why do bother too much about what is happening in the world? Because this thesis was very good when we were isolated. Okay, we were part of just a small economy in the world, completely isolated from the global markets. Now today we have a very sizable presence. Maybe closer to
Right,
for
right,
nearly 4% to 5% of the global market cap. We are there, so it has some meaningful number, not very meaningful as compared to China or US or other European country, but still meaningful. And when we
right.
were working in isolation, this thesis was working very well. So now you are part of global markets, and most important to understand, India is no more a emerging market. We still defined ourselves emerging market, but I call it India is now part of a evolved market. So we are, if not
Beautiful.
developed, but definitely we are evolved market. And if you are in a slightly evolved or moving towards developed market, and hence this thesis of multiplying stocks opportunity which were there early stages will not be applicable. Today you are so much governed by what is happening globally. Okay, I very simply we define we live in a very dynamic world. I always talk about that we brought India's first dynamic style of money management. If we live in dynamic world, data points are continuously changing minute to minute,
Right,
looking at a geopolitical, what Mr. Trump has to say, how Iran is reacting, how crude is reacting. It means minute by minute data points or high frequency data is becoming more and more relevant. And hence your investment style cannot be very static. Okay, ये क्या फर्क पड़ता है?
right, right,
Matter.
right.
I'm here for long term, 1 quarter, 2 quarter. We keep on hearing these phrases. It doesn't matter. Okay, but it matters a lot in real life. So what is important to understand is that if we are governed so much by macro and it affects us on daily basis, then obviously it has its own impact on our own psyche. See, ultimately, market is all about the perception game. This is a way how we say Maya. This Maya plays a very important role in.
Yes,
Okay, so with the perception or depiction or whatever narratives you want to call it, so it has its own thing. Ultimately, being a human being, it affects us. And market is ultimately is what is a collective feelings. When all of us are very bullish, market is up. As majority people are bearish, market comes down. It's a demand supply game.
right.
Ultimately, macro influence you a lot, and day by day this phenomenon will only going to increase because we are now part of a global markets, and hence it is very important to track macro. And this recent battle, west war, whatever the Iran and US battle, is clearly endorsement that how people are tracking minute to minute development.
Correct, correct, correct. So one of the things, Sandeep, right in the beginning when we met in 2008, one of the things you stuck to is saying the only advice worth giving, whether it is investment or mutual fund, is measurable advice. That was the mantra you had then.
Yeah.
But you were very pragmatic also. You said, I'm talking about probability, not certainty. And you had a thumb
Yes.
rule that 72% versus 18%. Talk about that because that's also a very interesting thesis about probability versus certainty.
Okay. So, since we live in this world and this business is all about getting it right, so it's a game of probability. So, we have created our own thesis called predictive analytics. Today, the AI and ML world, people are more talking about analytics, but we have been building it for last 30 years. Started from my house, the analytical sites. So we call it predictive analytics. Okay, which
Okay.
means an analytical tool has something which you can predict for future. Okay, and that's the
Okay.
reason a predictable, what we call a predictive analytics is a probabilistic sign, not deterministic science. That's the way we define it.
Right.
Okay,
Right.
so with the
Right.
probabilistic science, we can define or quantify the probability of that event happening. Okay, we
Hmm.
cannot say with
Hmm.
certainty this is exactly will play out. Okay, and that's the reason we as a firm, when we talk about word quant, you are more familiar because you only created this logo. And see, we quantify everything. A lot of people get confused with this thesis. Oh, they're quant house. Yes, we also do quant. Okay, but we are not
Right.
only quant house. We quantify everything, and hence it is known as quant. Anything which affects market can be quantified, though it's not easy. And we can talk in a very simple manner, but when you practice it, then you realize it's very difficult task to do that. And we try to attempt that, and then over a period of time, this has become a passion. Our ability to connect the dots,
Hmm.
and then you can see what is coming. So it's like, when you were in kindergartens, you used to have a drawing book. I always give this very simple example. In a drawing book, you have these dots, and you connect the dots, and picture emerges. When you are
Yes. Yes.
KG, or in the kindergarten, the pictures are very small. As you come to KG or upper KG, lower KG, or first standard, the picture size moves up. Then you start playing with your from your focus point of view, boxes and other thing. You try to combine that and create some structures out there. Now, as
Beautiful.
okay, and when you connect these dots, your picture become more and more clear. Okay, as that's the reason we say, when we talk about in a complex mathematical world, when we look at both dependent and independent variables together, and when
Right.
we're
Right.
trying to connect the dot, and if picture is becoming more and more clearer, we take bolder and bigger calls. If picture is becoming hazy, we dilute
Right.
our lie low, not necessary to take a big call, because data points are mixed. And that's the way we
Right.
summarize that our ability to connect dot has really helped us in visualizing what is coming and what can happen. Again, no certainty. It's a probabilistic game which we try to specialize in that.
Yeah. I think one of the validations, Sandeep, was that you were able to tell us in 2012 what is going to happen in 2020. That was a great validation of your predictive style, right?
Yeah. So it's a very
Right.
interesting thing, okay, because this is we actually wrote in 2012, in August 2012, in our strategy report, how world will change from end 2019 till 32 33. So we actually
Right.
forecasted not the markets, but we forecasted how geopolitical volatility will spike in this phase. And our
Wow.
thesis is that in this period you will see extraordinary choppiness globally. Okay, and I'm
Okay.
talking about not only the volatility of the markets, but I'm talking about geopolitical volatility. How geopolitical volatility will be the highest, maybe in the century, or maybe in the couple of century. That's a trend we were able to spot. Now you ask me
Hmm.
some very basic question: how we got it? Okay,
Right.
now as a student of numbers, track lot many data. Like if you go back, we have thousands years of wheat data, maybe 350 years of cotton data, or 200 years of US UK yield data, or 100 years of US yield data when there was no 2 years, 10 years, and 30 years yield. So historical data we have, okay, and we go back and try to say in what circumstances. Like wheat is like the oldest data we have, 1,000 years of data.
Right.
Okay?
Right.
So
Right.
of 60 years of data. Again, these are largely global data. We don't have much in India to talk about.
Right.
Okay. So what is important to understand? We try to understand in what circumstances certain cycles will lead and what circumstances certain cycle will lag. Okay, because as a
Okay.
student of cycles, people just form some opinion. These are 90-year cycle, this is 7-year cycle, this is 15 years, because if something has happened any number of times, when you talk about like a seasonality, okay, so people say ki how many times, let's say in the month of April in last 20 years market has behaved. So you have a history, and then you say okay, 70% time market has done well in April, let's say. So you say the
Okay.
probability of this month will be also good. Again, there's no certainty, but this is
Right.
a very
Right.
simple, because you have just put the data. Now you are not. If sometime it works, sometime will not able to work. So you will say, okay, the probability was high. Okay, which is one way of
Hmm.
looking.
Hmm.
Can you quantify? Okay, so we go back and try to quantify it in what other data points are there which lead to this outperformance. Okay, so we try
Wonderful.
to see how business cycle or economic cycle or interest rate cycle or inflation cycle, okay, how these cycle have lead lag effect globally,
Right.
and
Right.
that plays a very important role uh, in terms of determining the direction of the market. Because see, a lot of people don't look at the currency market the way we look at, okay. See, I
Absolutely.
understand that currency is the biggest market in the world in terms of value terms, okay, and
Okay.
pay games over there of size on few bips. Okay, like here we say we're not happy with 10-20% return sometime. Okay, there you're talking about 2 bips, 1 bips, 3 bips differential, and there could be billions of bet for 2 bips. So that is the
Wow.
skill. So when you understand that market, and very important to understand, in a good forex desk globally, a trader will retire at the age of 35. Okay, a lot of places they retire at the 30 itself. Amount of pressure which the FX desk has, okay, the person should have a very deep macro understanding, because they are moving the market. And I said few bips, billions of dollars on stake. So it's a
Wow.
your reflexes has to be very sharp, okay. And that's the reason people retire, because after 35 age they think their reflexes are started, decay process begins. So
Oh. Right.
part of
Right.
the test. So I'm saying that level of sensitivity is there. Here we talk about, okay, USD INR is okay, one pair. Okay, we also look at into it. But for us, life starts at currency market. That's the biggest market, followed by, if I have to say, fixed income market with the second largest market globally, and third is
Okay.
commodity, which is the third biggest market, and then equities actually comes in the last. So if you understand the linkages between currencies, commodities, and yields, you are able to gauge
Wow.
better. And if you can understand how the, in what scenario this will drive. So sometime currency market gives you first volatility sign, then it comes to the fixed income market, sometimes come to the commodities market, or sometimes commodities market gives you early sign, okay, and then it comes to other market. Equity will always be the last, so it's not like equity market will ever giving you first sign. And hence it's very important to understand, I'm giving a thesis behind that and logic, which
Fascinating. It's fascinating. Yeah.
you have to understand the importance of interlinkages. I have seen, because we were advisor, we used to run our own broking company, so we have serviced a lot many smart money managers globally. Okay, and a lot of people say, okay, I'm not a top down guy. I'm a specialist. Okay, you talk about bottoms up, talk about stock ideas. We are not bothered too
Hmm.
much about it.
Hmm.
And I think the
Hmm.
people who are not bothered too much about macro, they turn out to be a disaster money manager in the long run. Okay, why I'm saying that?
Hmm.
Because if, let's take example, if you are forecasting a, let's say, Reliance balance sheet, okay, or earnings of Reliance, if you don't understand where crude is heading, where natural gas is heading, if you don't understand how
Wow.
the US
Yes.
currency is heading, on what basis you are forming your opinion? Okay, now you say it's a complex thing. What people do very smartly, every year you take 3 to 5% depreciation in the currency. It's very, because historically it has happened, so you say this is the best way. Then you say you follow some cycles and say ki every 5 years crude moves up by this much percentage, so I'm going to take this prices. Now these are thesis will not help you, okay. And that's the reason,
Hmm.
when you get earning seasons, you get positive or negative surprises, because all these future earnings which people forecast are based on certain assumptions. When
Right.
assumptions
Right.
fails, lead to positive or negative surprise. That's the reason we at Quant don't get into this 3 years forward years earnings number. Uh, and why I'm saying that, because like everybody generally talk about how the earning cycle would be, how the earning momentum is, how the next 3 5 years looks, how next few quarters look at. But nobody talks about how the multiple will change. Nobody forecasts multiples. Okay, because
Right, right,
ultimately price, when you see the price movement, price is a function of earning expansion or
right.
compression. Price is a function of multiple expansion or compression. We have seen sometime some of the stocks have rallied significantly. They become multi-bagger or so, and then they start correcting, and people say, oh, earnings are still expanding. Oh, earnings are expanding, but multiple started shrinking because market has factored much earlier. And for whatever reason,
Hmm.
if you've seen traditionally thing, any growth company which has been rallying for years, suddenly you see some compromise on the growth, then market penalize those companies significantly, because the entire their DCA was based on certain assumption, this sort of growth rate. When they realize this
Right,
sort of
right.
growth rate is not possible, then market multiple compression happen faster than the anticipation of most of the people. And people don't
Right.
focus on uh, what you call it multiple forecasts. We do lot of work through our behavior thesis called perception analytics. Instead of looking at, we
Yeah,
cannot quantify with the help of perception analytics, we can quantify how the perception is changing, which is a substitute of a p multiple. At least mathematically we have put in efforts, and we have been
yeah.
reasonably success in quantify that. And hence both multiple expansion or compression and earning expansion compression, both are equally important when you get into a forecasting business.
So let's go back to the philosophy because you have used that word so often now. We condensed the philosophy of your company into that brand name called Quant. And then
Yeah.
we created an identity where all the 26 alphabets had mathematical symbols. How
Okay.
have you managed? You have grown so many by so many such a big factor. How have you managed that everybody in your organization lives up to this one word thing, this one word philosophy of quant over the past so many years from 2008 till 9? What
So
processes, what models, what have you employed to make sure that everybody lives up to it?
okay. So Kiran, it goes back before 2008 also, when we quant was formed.
Okay,
Okay, and actually journey started in 1995 from my house. Okay, and
right.
when I hired first time a programmer. Okay, so earlier we used to deal, because all of my family, cousins, brothers, sisters, they are all in the tech area. So I have some advantage,
Ah,
a techie myself, but we have that environment in our family to understand. So I was early adopter of tech. And today, if you ask me, Quant is a tech company. We are not asset management company. We are a platform company, a tech platform company. That's the way we define.
fantastic.
No comparison with what
Yes.
is getting built in US. We are it's too early stages for us in India, and that's the
Right.
reason. So we used to do, our code was there in Pascal and COBOL and or Lotus notepads. I'm talking about way back in 93, 94 sort of thing. Okay, so that's the way when I came to market in 92, 93. That's the reason, early stages of data. So we used to gather data, and it's that's time I still realized it's just not possible. We used to get a bhav copy. If you remember, in the train, when we used to
Yes,
travel local,
yes,
people
yes,
used to scribble on the bhav copy. Okay, and it
yes,
was so tiny little words was there, and people used to really struggle. Okay, old man
yes.
used to carry a lens also, and to see, magnify and see what. Okay, so now that bhav copy zamana chala gaya, frankly speaking. So what
Correct,
I
correct.
understood, so much data is there. So I started working and programming those things. So those days was very different. You there was no engineer, software engineer. There were some coders or small time programmers guy was there. The people who
Hmm,
have done
hmm.
some NIT course or Apple some course. Those are the guys who used to get it very very early stages. Okay,
Right,
and
right.
gradually, when exchange NSE came back in started in 1994 or 1994, if I'm not wrong, I hired a programmer at my house, which is today working in the US, is one of the mostly expensive
Oh,
BFSI specialist. Okay, so he built my initial software. So over a period of time, we build this analytical tool, uh, what we call it now quantamine. It's a quantamine. So we are,
quantum mind. Okay.
yeah. So this year we are celebrating 30 years of quantum mind. We have completed 30 years, and this is a. It started as a small analytical tool, gradually built when we started our asset management or the broking business or the prop business. We started adding risk analytic into it, liquidity analytics. So over a period of time, we have recently written a book also about on quantum mind, a coffee table book that I'll share with you. It talks about our
Yes.
journey, how as a small Indian grown firm was early in putting efforts, and we have actually invested $24 million in building this analytical platform over
Wow.
time. Okay, so nearly $1 million is invested every year to maintain and build this something which we have built over a period of time. So it has a lot
Massive.
of data
Massive.
and lot of things are automated. Okay, so our ability to process, see in today's AI world, people say I can do it in 15 minutes, but 30 years back that efficiency was not there. So we have that
Correct.
edge over a period of time, that see we always say we can do decision making in 15 minutes. Okay, where people
Right.
take 2 hours or 3 days to take a call. So it really helps you when you have your own analytics are in place, like how many globally you have FactSet model or Havel analytics. So there are many trim traps of the world.
Right.
Many
Right.
analytical platform are available. Bloomberg itself is a very live example what you can do. We feel very handicapped without getting Bloomberg as of today. Also, we are so used
Correct.
to it.
Correct.
So
Correct.
the Bloomberg was a very big aspiration. Ki what how they have built, okay, and we have gone one step ahead and try to see how well I can customize my needs. Okay, how
I
well we
see.
can automate that. That today, if you look at in our mutual fund space, we release our fact sheet on the first working day itself. Okay, where industry
Okay.
used it takes minimum 1 weeks to 2 weeks to do it. Okay, because for us it's easy because we have automated. Any given time I can produce a fact sheet. If you ask me next 1 hour, I can produce and give it to you. As of today, what is the situation? So
Wow.
risk numbers are live. So whatever we build, it is on live platform. I can at any given time I can tell you my live NAV. Okay, if you call me at 12 o'clock, 12 noon in the morning, I can tell you what is the NAV of particular scheme at this point in time. Okay, so it's
Hmm.
level of automation when you build, because we always say we are in the business of risk. Okay, and if you can manage your risk better, your returns will be generated. So this business is all about risk, and risk management is becomes very vital, and that's the reason we quantify the probability of making mistake, which is too much dependent on human being. Okay, too many
Correct.
people
Correct.
involved into it, it create more chaos. Okay, so we try to automate everything and life becomes easy. And then the good aspect is that even we will make mistakes, so we'll always say our entire VLRT framework, which we can talk about, has been built from mistakes. So it's not something we got a very unique idea and my dream and I started this. This is something unique we have built. A lot of people portray something unique they have built. We very simply say that this VLRT framework has been built from our mistakes. Okay, I have
Very,
made
very insightful.
maybe huge mistakes and blunders in life. Okay, and what is important to understand when you build system, idea is that you should not repeat those mistakes. Okay, so the
Hmm.
probability of
Yes.
not repeating mistakes also helps you to taking the next level. We will make new mistake as a human being, we will make new mistakes, but the list will keep on reducing over a period of time as compared to others who does not have systems. They keep on making same mistakes year after year, and then they
Oh,
realize, oh, that was the
yeah.
problem. Okay, then people define themselves, okay, this is my behavior, this is the way I am. Then it becomes a
Yes.
justification. Okay, that's
Yeah.
the way
Yeah.
I operate, this is the way it should be. It doesn't work, that's a different issue, but past it has worked. Okay, so I
Right.
think this
Right.
all bogus thesis when people get into it, because they don't have not build systems around that. Our
Correct.
house
Correct.
at Quant is a very systematic house. You're surprised to see that we don't use any outside software. Everything is in-house built. Okay,
Wow.
so risk management or order management over fixed connectivity, whatever, or our compliance tools or any analytical platform, life becomes easy and everything is integrated. See, the challenge happen in industry when you using 10, 6 or 10, 12 vendors. None of the
Hmm.
software to each other. Then you keep on building
Correct.
interface. You need more and more people because interface are not there. Then becomes a very
Right.
tricky situation where we have a system which is completely integrated. Your back office, mid office, front
Beautiful.
office, okay, your fund management or compliance. Life becomes easy.
It's very holistic. It's very
Automation.
holistic. Yeah, yeah.
Yeah.
Another fascinating thing you told me, which again, living up to your rebel archetype, is you said that while everybody talks about that all investment should be long term, you had this beautiful insight where you said to me that yes, but all human beings have short term and mid term needs, and therefore you just have to make sure that it's while you need something for the long term, there must be some pathways for the short term and the mid term, which is, everybody from Warren Buffett downwards talks about long term. Just spend a few minutes on that thought.
Yeah. Since Kiran, we are largely a behavior house, so I look at everything from a human psyche and I say this is the mind game
Right.
which people play. So when you understand these things from a behavior perspective, you do get many answers. Okay, let's say understand two different human beings. Okay, now
Right.
both the people say I have a long term. I always say at the peak of the cycle, everybody is long term investor and everybody has high risk appetite. In reality, they are very different. Okay, so our idea is that if you understand yourself, okay, your wealth manager will not guide you. Okay, your broker will not guide you. Or your advisors will not guide you up to that extent because you are your as an individual, you know best. Okay, and
Mm-hmm.
hence important to understand your requirements. Okay, what is your needs, what is your planning for next 5 years, 10 years, 20 years perspective. Your needs has to be can be very different from my need. Let's say you have been staying in Bombay for a while. You already have a house from your parents side, you have inherited that. Okay, or maybe your dad has inherited from their grandfathers or
Right. Right.
father.
Right.
I came from Bombay. I never inherited a property. Okay, the first thing which I will do, my need is to have a house. Okay, so my needs is very different. Where you can come straight away to the equity market, which I might take some time because I would like to fulfill my this piece of the dream, or my allocation towards equity will be significantly lower than yours. Okay, so now if
Mm.
both of us try to, or let's say if I try to copy something, I also commit a large amount where my
Mm.
basic needs
Mm.
are not fulfilled. I'm getting into a long-term investment. Some people are become like a private equity investors. Okay, early stages in
Mm.
life. This stock, if I
Mm.
hold 10 years, will become 20 times, 50 times, 100 times. Because a lot of people hear the success stories of people. This stock has multiplied this time. And then you get this gyan of long-term thesis. If I have held it for long, then it has happened. What about the thesis where you lost money? You don't talk about your
Mm.
it's a human psyche. People don't talk about their failures. Okay, and that's the reason
Right.
we differ from others. Say we talk about failures. We talk openly about our failures. Okay,
Right.
and that
Right.
makes a lot of difference. Okay, if your basic needs are not fulfilled, and then you look for 10-year investment, you have put in a large amount of money, and that stock for whatever reason is unable to move with your expectation. You are stuck. It's an illiquid stock. You bought for 10 years. You have committed a lot and you are lost now. So what happened? A,
Mm.
you hold this stock from a longer term perspective, and then you are missing out other opportunity, and then you
Correct.
have a tremendous family pressure that other people have taken a house and we are unable to participate. Okay, so then
Mm.
becomes a huge psychological game, and then virtually at the bottom of the cycle, sometimes you might get capitulate, and then you say equity has been a very bad experience. I will never come back. Okay, so
Mm.
you
Yeah.
have now created a barrier in your head, okay, in your mind, ki equity are bad asset class decision. I will never participate. Then you will never able to create that wealth what is required, and hence it's very important to understand and balance your need and design your portfolio accordingly. What is your risk appetite? You can answer the best. What are your financial compulsions? What are your family compulsions? Unless you understand that, you will never be a good investor.
Mm. Yeah. So, Sandeep, since you have this huge powerhouse of predictive analytics for viewers, by the way, viewers, if you have questions, please type them in the comments box and we will take them after we finished talking with Sandeep. Is there a prediction that you have for simple folks who have put money into mutual funds or who are doing SIP for India? What would be your kind of reassuring prediction for them?
Okay. So I think the timing of this question is good because last 2 years has been challenging for the market. Let's
Yes,
understand the larger thesis first. Okay. So we have been saying that from 2017 till 2047 is a phase which belongs to India. Okay. And when I
wow,
saying that because this is a where we this is actually title of a next book also we call it Great Transition.
the great
2007
transition. Okay,
2047. There's a next title of the book where we will further expand the J curve we talked about in the beginning that how we forecasted till 2030 to 33. Where we are talking till 47, 50, what changes can happen in the world. More from a market and economic perspective. We don't get into anything else beyond this. This is the only
right,
area we
right,
special. So we are trying to showcase that India something has changed, and that's the reason we say from a perception point of view. Look at today what respect India enjoys. Okay, and
right,
obviously the PM is the most rated or sought out person in the world. Okay, now you look
right.
at perception about India has changed. Okay,
Hmm.
many companies CEOs are Indians. Okay, Indians
Yes,
done a great job on the tech side. Whatever reason, last two few years we lost it. That's a different issue. But prima facie, our strength on technology understanding, our intellect, and our hard work is getting recognized globally. And Indian are getting more respect as compared to what we used to get. I just think when I first time into UK in 2000, okay, people were not even expecting a tip from Indians. Say Indians don't give tips. Okay, that was the like they used to look like they know this
amazing.
guy. Okay. Today we not only pay tips, but people have respect for you, and this is something which we are linking with the perception of India, and we are saying that India perception has changed, which means if I have to put in multiple perspective, India P multiple as a country has expanded. Okay, so if
Wow,
somebody believes that India will get cheap, we underperform because we are expensive than emerging market. We were expensive than the developed. We were the one of the most expensive market in terms of P multiple. Why
right.
you get this sort of multiple? Because something has changed. So see, sometimes what people have to understand, if these multiple are sustaining from a longer term perspective for last many years, it means something has changed. Don't question that. Okay, these are temporary blip. We are saying it will come back to the historical level. No, if something gets changed, then you have to work backward and say why it has changed. What are the factors why it has changed? So India, from a longer term perspective, we are in structured bull run till 2047, 50. Why I'm saying 2047? It's not 100 years of Indian independence. It's all about India demographic cycle peaks out in 2047. And hence,
All
we,
right, all
as
right.
student of behavior finance, we always say demographic do play a very important role in the economy's point of view. When PM keep on talking about one of the young crowd we have, under 30, we have the best highest population in the below 30 years of age. So demographic is in our favor. Like China demographic cycle has peaked out. How in 97, 98 peaked out for Japan. So we have another 22, 25 years, okay, for this cycle, which means this could be a great wealth creation journey, provided we behave in a mature manner. Don't get excited at the peak of the cycle, don't get capitulated at the bottom of the cycle. If you are doing SIP sort of thing, is a great vehicle or instrument for you from a long-term wealth creation. And I think in India,
Fantastic.
wealth creation journey has been very different now. Retail investor also has become very, very mature, and hence we think I don't think anybody should be worried too much about from a longer term perspective. Okay, now you
Hmm,
look at how
hmm.
quickly we have rebounded back to the pre-war levels. Okay, and mid cap is closer to all time high and just 1% away. So it's very important to understand that we are in structured bull run. We were in cyclical downtrend phase, which is coming out. And the beginning of our fact sheet, 1st April, we wrote. There's a time to capitalize the opportunity, don't get capitulated. Okay, where
Beautiful.
everybody went up completely, and we said it's a time to increase your exposure. We talked about the time to increase even your small cap exposure, because we have been very bearish from July 2024. We took that cautious call much earlier than the market, because we are slave of data. In the business of risk, we are always say you have to be ahead of the curve. You cannot do a postmortem analysis. Okay, oh, that was a risk off period. Oh, that was a
Yes,
period.
yes,
Okay,
yes.
because doing a postmortem, let the postmortem work should be done by media houses, because that is their job. If you as a money manager or analyst cannot foresee what is coming, then we are not doing our job properly. Okay, and
Right,
hence
right.
many of our high frequency tools or analytics showcased in July 2024 that something has changed for India. India macro picture started deteriorating. We were the first to downgrade India. At a time, many global houses was upgrading India, and you have seen maximum downgrade in India has come in the month of March. Between January to
Hmm.
March, maximum downgrade for came for India from the best global names. So we are not blaming them, but ultimately they are also human beings. They also get capitulated at the bottom of the cycle when you have
Yeah, yeah, yeah.
tremendous pressure. And that's the reason we always say we create these analytics, because at the bottom of the cycle or the peak of the cycle, you don't rational thinking is missing. You don't know what to do.
Correct,
You're
correct,
lost.
correct.
So, and if you have designed by the time some tools, the tool forces you, oh, this is, then it's a, like we say, oh, you have coined this word, objectivity is our religion, data is God, there's no space for
Yes,
subjectivity. So, we proudly say objectivity is religion. Objectively, if you can define it, some of these
yeah,
data, then it works meaningfully. Now, you also have to understand we also underperformed. We were early in taking that call, but we have to take the call if data is showing. We have given fantastic return from 2000 to 2020, 2024. Sometime being early also costs you. Okay, but
yeah,
that is
yeah.
business. This we have, people have to understand. This is a big problem in India. Everybody is only interested in returns. People all
Hmm.
at the best they will look at the relative returns with the benchmark, or relative to the competition, or relative to their friend circle what they got return. Okay,
Hmm.
very limited people actually understand the risk adjusted return, though we were the first to start in our fact sheet to talk about risk adjusted statistics. But best of the wealth fund don't follow, because it's a mindset game. Because you have been a structure bull run, who's bothered about risk? But if two fund have given similar returns, you have to look at the risk what someone is taking. It may be possible somebody is taking
Right,
more risk
right.
to give the similar returns. So that
Yeah,
becomes a very, excuse me, a meaningful thing. Okay, that risk is very vital, and that is something I think in last 2 years people have understood the importance of risk.
right. So, Sandeep, I'm going to expose our viewers to uh, a dimension of you, which is about spirituality. I'm going to read out a mantra that you have created.
Yeah,
It says, fundamental is the Atman, liquidity the prana, and sentiment the Maya. And you have written a song which is absolutely fabulous. And couldn't imagine a tech wizard like you also had this angle of creating a mantra in Hindi. I'm just going to read out one last para.
yeah.
जतन माया है ज्ञान है माया स्वप्न माया विज्ञान है माया लाभ विकास आय अभिनंदन माया हृदय का है स्पंदन. And there's a beautiful song. It's going to come out in a book, right? Very soon.
It is already there in the book. We are releasing this audio very soon. It's a formality left, and
Okay, okay. That's a beautiful
a beautiful
name.
song done by Karsan, by that famous Gujarati folk singer.
Fabulous, fabulous. Are there any questions, uh, Roshna, or should I continue with nice? Are the global factors affecting the SIP inflows?
See, data is not showing. Okay, what is
Acha.
important to understand that yes, in between we have seen extraordinary flow towards precious metal. We saw extraordinary numbers in the lump sum on the SIP got increase on the gold ETF or the silver ETF. If you exclude that, then obviously SIF flow was marginally affected, but that's okay. I don't think so far any disturbing signal is there. One need to worry about it. I think retail has become more mature. They have understood the importance of wealth creation. So I think this journey will continue from a longer term perspective.
Fabulous. How quant prepares for volatility in today's extremely uncertain world.
See, I always use this phrase, you make this volatility as your best friend. I describe volatility as an invisible animal. And if you can aim it better, then you will not be worried about it. See, it's a psychological thing, like we faced 2020 much better than others because we were
Yes,
prepared it's coming. We were not prepared it's coming in the COVID form. Right from September 2019, we increased our exposure, let's say, towards pharma, IT,
I see. I see.
and or healthcare. We sold off all leverage economy stock between January to March. 31st March, we didn't have leverage economy. Banking exposure was zero. Metal was zero. Okay. So it's because see, this is very important for an active money manager. And let's say today
Hmm.
example, we are the one firm have zero exposure, zilch exposure in the technology sector. Okay, where we were early
Wow.
to take that call in September 2021. We said that something has changed. Indian IT company was not geared up. Okay, and now to take a very bold call not to have any exposure in the best name when you talk about Infosys or TCS or Wipros of the world who has been delivering, and we have been beneficiary of FX because of them, but they have not kept with the pace and we were early to spot. So
Right.
when we talk about
Right.
volatility as a trend, it really helps if you understand. Okay, like I have always seen a lot of people say let this dust settle down, let this volatility settle down, I'll buy 10-15% higher. I don't like to see this pain, this falling knife sort of thing is very difficult to digest. It is unbearable pain now. So if you are unable to manage this volatility, then you will always will not be winner in this game. Okay, this is
Hmm.
the, if you understand and you see when you see extraordinary, see volatility is very important to understand mathematically that walls cannot stay higher for long. Okay,
Hmm.
so if
Hmm.
it is then it come down. I'll give you a very classic example on oil. Okay, and the seventh or eighth on CNBC one program on wars. Okay, we talked about, and a lot of eminent people were there. One global guy talked about crude will be 150 to $200. Okay, now obviously when you are at 110, 120 level, that's a very human side to say this is the level is coming. Okay, I only said that crude will be 70 by end of the year, and at max this month itself it will peak out. Okay, why I said that? Because
My
the date.
God.
Okay, because if I
Hmm.
get the volatility, because this question was asked, the volatility index of crude or the various walls data which we tracked spiked significantly. They went up to 190, and by the time it corrected back to 90. What it implies, this is purely from a behavior perspective. What it's saying that smart people or market forces are believing that crude cannot sustain there for in the medium and long term such high levels. That's the reason wall collapse. If
Fantastic.
there was to it will sustain, then walls will remain elevated for a longer period of time. They always say walls never get remain elevated for a longer period of time. Okay,
Right.
and
Right.
even when we talk about volatility expansion cycle or volatility compression cycle, uh, it that means the zone has changed. Okay, the band has moved up, but band does not mean that spike and that will remain for long. It never happened. So if data was showcasing that market is telling us that we are not pricing high crude environment, who we are we to judge? Why we have to
Correct.
form our
Correct.
opinion?
Correct.
Ki this will happen because best of the strategists are writing this is the creed, and I always believe from a behavior perspective and best of the people give up. That's a classic sign
Hmm.
of failure. They actually
Hmm.
give up at the peak of the cycle or the bottom of the cycle, and this is
Right. Right.
what we capture as a inflection points as a behavior house. So as a behavior
Yeah.
strategy, we capture these things and we actually thrive when we see something like this coming. It gives an endorsement. Our data is suggesting, and then we see this noise and narrative around you, which is again getting skewed on one side. It's a very classic example. Let's look at March 2026. Best of the people vomited. They got capitulated exactly at the bottom. Okay, The guy who are believing in India long-term story, they got capitulated and they cut down their exposure. And you see the move, which was very ferocious, what we saw in last 10, 15 days.
Mm, mm, yeah.
So data drives us,
It's,
not anything else.
yeah. Fantastic. As you said, sentiment is Maya. So,
Maya,
Sandeep,
Maya
that
is very
was,
important.
huh?
Maya is important, but you have to quantify the Maya.
Yes, quantify the Maya. Yes. This was very enlightening. From earth analytics to Sanskrit to spirituality to SIP. That was a fascinating journey.
I'll
Sandeep,
add
I've always,
last line I'll add. In our next book, you will see how we're going to. We have already covered. We already written about it. How India will emerge as a spiritual leader. How our leadership journey comes, not
wow,
as largest economy in the world. We will be leader. We will be thought leader, and the spirituality phase will going to increase in next 10 to 15 years, particularly, and maybe next 25 years also. Sorry, I interrupt.
fantastic. No, that's fantastic. I just wanted to say that we have Chlorophyll has thanked you many times in private. It's time to thank you in public, and a big thank you to the viewers
No, we are
for
grateful to you, Kiran, and you and Andy, who created our logo called Quant. Yes.
yes,
For
yes, yes,
people should know is the chlorophyll who created, and I think chlorophyll is equally proud what they created. They've
yes,
written all
absolutely.
identity, and this logo was shows in prominence. So thanks a lot for that.
Yes, yes. Thank you. See you
Thanks.
soon. Bye.
Bye.
Bye.